Markets Now is brought to you by Durastack Trait Technology, the latest innovation from Syngenta. Available for the 2027 season, Durastack technology features 3 powerful modes of action to outsmart, outmaneuver, and outmatch corn rootworms every move.
And welcome to Markets Now. I'm Michelle Rourke with Brad Kooima of Kooima Varilek. Grains are in negative territory this morning. Cattle futures started off lower, but are trying to come back with the hog market now in the green, actually. Brad, thanks for being with me. Let's talk about the big elephant in the room. Obviously, the U.S. and Israel going in over the weekend with strikes, military strikes against Iran, and that does have a risk-off tone to a lot of the market, doesn't it?
Absolutely. I think that's a great place to start. Thanks for having me on again today, Michelle. But yeah, it boils down to something that your listeners are probably tired of me saying, and that is that famous uncertainty is bearish cattle. I mean, we can go through the whole list of why, but the easiest dynamic is to look at what's going on with the stock market. Whether you like it or not, cattle futures have a tendency to follow some of those macro financials. Now, the stock market is a lot better. It's still lower, but it's way better than it was. And I think that might be contributing to a little bit of this comeback that we're seeing on the cattle here early morning. But yes, the whole issue of uncertainty now, I probably, if I had to guess it, I think that the war issue or the whole conflict here with Iran, do I think that is a game changer on the cattle? I don't think that will be by itself, because hopefully it doesn't last very long. It's short-lived.
I was going to say, how long it lasts is the big key here, isn't it?
Absolutely. And if we do truly disrupt, for instance, the supply of oil, that gets to be a problem, right? I mean, because that puts stress on the economy. And if that happens, then that'll, probably not help the cattle thing. But the old guy phrase used to be that conflict like this was actually bullish cattle. But I don't know. Let's hope we're into something way different than what the old time was here. So hopefully by the time we get here to next week and we're talking again, that this is a little bit calmed down and we're not worried so much about that anymore. And we'll probably still be talking about Greeley and stuff like that. I know you and I are both tired of talking about it, but that certainly is a big part of the market too.
Yeah, for sure. We'll talk about that in a moment. Technically, the market, though, had lower weekly closes, lower monthly closes. And in fact, I think you said we're below the 100-day moving average. This started already last week with some of this fear and anticipation here in this selling, right?
Absolutely. Yeah, we've got a softer technical picture that we've had here since, around Thanksgiving.
So we did quite a bit of technical damage to the charts.
100%. First time now we're back above the 100-day here on the some of the months right now, but we closed below it on April for the week, for the month, et cetera, et cetera. Some of that selling might have been a little bit inspired by month-end stop liquidation from the funds, but
sure.
If I tell you what bothers me about the market is something I've mentioned on your program, is the kill level. I don't think we're killing the available supply. And I don't think we have for a while. Is that the feedlot? Is that the packer? Is it both? Probably both. I think that there are some feedlot that has been intentional about making cattle bigger. I've heard that over and over. Well, my break evens are high. I could take a little less and still put 100 pounds more and still have more dollars. That story. Replacement costs are very high. Feed's cheap. And on top of it, we barely had winter. So the performance of the cattle here across the north especially has been amazing. So we don't feel very current here for a moment. Is it something that I'm waking up in a cold sweat about? No, but it always takes a little longer to clean up a few of these big cattle than one thinks you ought to. So that leverage, we've talked about it, is such a fine line, the tipping point of having it or not having it. Now I'm a little bit worried this week we're going to go into a deal and the Packers are going to say, well, that pin's a little too big, that pin, I'll buy that pin, but not, a little bit of that dancing around, because he's going to try to exert his influence, of course, too, to try to get some leverage here. But his margins are a little better. Maybe that'll help.
Fred, we already lost leverage last week, though, with lower cash trade, right?
And last week's cash was not good. Okay. 244 we sold cattle for on Thursday, and by Friday late we were selling cattle at 240. In some places even a little less than that, some 239 in western Nebraska. So yes, the tone and the psychology, guys turned into pretty easy sellers by late Friday. We'll see how much that translates into this week. Definitely felt like leverage did flip here during the week last week.
So we have a lot of bearish factors we already talked about: geopolitics, lower stock market, lower cash. A lot of this was also predicated by fear about this strike in Greeley, Colorado at the JBS plant. Get us up to date. Are we still fearful about that?
If I knew with clarity what was going to happen there, believe me, I would do my best. I don't, and I don't think anybody does. I'm very frustrated by this Friday chatter, largely generated on social media platforms that, they voted to strike. Yeah, no kidding. They did that 2 weeks ago, folks. But they have not voted, and I don't know when they're going to vote to whether they're going to walk out or not. It's a fluid situation, and I think no one will know until it happens, if it happens. My sense is that the likelihood of that walkout is less now than what it was when this whole rhetoric began almost 2 weeks ago. But we shall see. Anybody that thinks that they know, then let me know with some sort of definite. I don't think anybody knows, but I am frustrated that we feel like a pawn in the game here of let's throw out some news to see if the market reacts or not.
Yeah, and we saw that several times last week. So final question on cattle before we move on. Do you think the tops are in, and what are you watching for support in terms of, you talk about the 100-day moving average? Give us the numbers that we need to be kind of watching here, that we need to close above, or we're going to take another leg down.
I think that the short-term top is in, and maybe the top. I don't know.
Okay.
If I had to draw and I don't know, of course, the way it feels to me is that we're gonna struggle with the market here a little while. We're in this stretch here where demand is not great. The Packers got a little bit of leverage. Could April cattle get back to 225, which is halfway back of this leg up? I guess I could see that happening, 225-ish. And then maybe if we get cleaned up, which I don't think will take forever, we still don't have a big supply of cattle. Then I could very easily see a replay of something like we did last year, or we come into that May-June slot, that time period, kind of the new April, right? Because we pushed that calving rate back so far. But and then to see the market come back nicely as we see that improving demand as you get closer to Mother's Day. So what would I like to see to make me feel better about the market? Right now, I think April cattle have to close above 238, and I think to get the funds to liken it, I think they're going to have to take out the highs, so above 244. So we've got a tall task here now to get the funds to really have confidence in the market. And the funds don't like this uncertainty stuff. If you're a fund manager, you don't like this crap of worrying about Greeley and whatever the geopolitics and stuff for the moment. So we got a little bit of work to do. I would think discounted futures, Packer margins improving. Some of that stuff, that's what you want to hang on to if you want to be a little bit friendly, but be careful.
Okay, we'll hang our hat on that. Meanwhile, hogs open lower, quickly turn to the plus side here. Higher weekly closes last week. So the funds are buying on the dips, and you tell me that disease is also pushing this, right?
If the funds like it over there, that's pretty much what's important to know, and they sure seems to be heavily engaged there. The fundamental story here from some of the hog guys that we talked to, well, all of the hog guys that we talked to, the fundamental guys anyway, we're back on this disease topic, and PRRS, PED, and a lot of it, and I think that's getting some traction again in the market, and obviously it does make a difference. Hogs are very prone to this, especially the nature of how we raise them anymore, in close proximity and in confinement to each other. So that seems to be the fundamental story. We kind of held where we had to here today, and it's pretty remarkable the way they held together given that collapse in the cattle. So
no doubt. What about the grains? We made new highs for the move already this morning. In fact, some of these soybean contracts, took out the November highs. Couldn't stay there though. From a technical standpoint, you had higher weekly closes, you had higher monthly closes, but we have this fear of the war, maybe China backing away from our meeting in April. Is that what's tanking the market here today or pressuring it?
I would think that would have an awful lot of influence on the market to the downside for sure. Throw in the whole uncertainty of being able to export generally, but given the nature of how broad that conflict has quickly gotten, but yeah, particularly and especially for China. They're not a fan of this whole operation, and as we move along here, I'm afraid sooner rather than later, where South America becomes a viable alternative for them to get their stuff from, then I worry that you're going to start to hear, well, what about that supposed 25 million that they were going to get from us? How come they're not doing that? This action's makes me a little queasy. New highs for the move and then lower for the day, which also sets you up for weekly and monthly stuff, looking ahead here. So I'd be a little careful on the beans. I have been a little bit friendly on both the corn and the beans, frankly. Corn making a little bit of a try here. Nice uptrending market for about 4 weeks. It's not the time of year usually where it pays to be real bearish. Usually between March 1 and May 1, the market sees a little life. I know there's areas of the Corn Belt that are worried about less than perfect weather because it's so dry. So I don't know. I guess I'm going to fall back on the idea that between now and planting time, we'll see a little more risk put in the market prices because of potential weather problems moving forward. But yeah, stay tuned. This geopolitics thing is a problem.
Yeah, and it's sad because, like I said, usually after you get a higher monthly close, you see the funds continue to pile in here, don't you?
100%. I know. We'll see if they dare to stay. I would think that there'd be a tendency for them to hang in there here, but yeah, crude oil sharply higher. That used to be bullish corn, but doesn't seem they're getting much traction there either.
Yeah, but there's definitely money flow going on. All right, thanks so much, Brad Kooima with Kooima Varilek and Markets Now.
With corn rootworm costing farmers up to $1 billion a year, you need the right strategy. Introducing Durastack Trait Technology, featuring 3 powerful modes of action to strike corn rootworm at full force, outsmart, outmaneuver, and outmatch their every move with the industry's first triple BT protein stack built for corn rootworm control. Take back your yield potential. Make your move at Durastack.com. Available for the 2027 season.